Hey everyone, Happy New Year. It's a cold day here in Southern California. And in this video, I'm going to bring you one Warren Buffett dividend stock that I think is a screaming buy for 2024. So without further ado, let's get right into it. Let's see what this dividend stock is, why I like it so much, and why I think Warren Buffett also likes it so much.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the dividend stock that I will be discussing in this video is Visa. Visa is the dividend stock that I think is an excellent investment for passive income investors in January in 2024 and beyond for that matter. I've been recommending Visa stock for several years now. I've owned Visa stock for a long time. I can't remember how long I've owned Visa stock. It's one of my favorite businesses. It's the most profitable business, as I will show you, and it's got an incredible competitive advantage. So let's take a look at this incredible dividend stock. Now, one of the reasons why I like Visa stock so much is because there are 4.26 billion Visa cards in circulation. 4.26 billion Visa cards. That means when people use a card for a purchase, it's very likely that it's a Visa card. The percentages are relatively high. And for that matter, there was a 7% increase year over year as of its latest update, 3.976 billion the year before. So despite its massive scale, it's still growing the number of cards in circulation, a 7% increase year over year. That's increasing penetration. Also, as the world evolves, cash is becoming lesser and lesser as a percentage of transactions. So that's a nice tailwind for Visa. Additionally, Visa takes a percentage of every transaction that uses one of its cards, plus a small fee. And so when inflation is rising, that's actually beneficial for Visa because the total purchase amount increases, and so Visa's revenue increases while its cost do not increase at that same percentage. So it creates leverage and it increases its profitability. Those are all good things, and those are all reasons why I like Visa. Another reason why I like Visa is because the two major players, Visa and MasterCard, they don't compete with each other very fiercely. You don't see them offering promotions, discounts, incentives to a large degree to try and steal customers from each other. They keep things relatively stable, and plus or minus 1% of an incentive or something like that they might do, but nothing substantial. And you can see that when you look at the profitability of not just Visa but also MasterCard. MasterCard is another stock that I've recommended as well, but Visa I like even better than MasterCard. So Visa offers passive income investors a dividend yield of 0.72%, but I don't want that to discourage passive income investors. When you're investing in a dividend stock to generate passive income, it's generally a good thing to look ahead 5, 10, 20 years. And when you've got a dividend stock, you want to understand if this dividend stock has a good probability of increasing the dividend per share over time. And the reason companies increase their dividend per share is because they increase their profits and they increase their cash flow. So with that extra cash flow and extra profit coming in, the company decides to pay out dividends because they look internally, and if they don't have enough uses for that capital, they need to return that to shareholders. Companies generally don't like to have money sitting around not earning. That is a downside for companies. That reduces some of their financial metrics like their return on assets and things like that. And so they don't want money sitting around. They want money to be working. And if they can't put money to work, they give it back to shareholders. And so that's why you want to look for companies like Visa that generate strong profit and cash flow that can increase their dividend per share over time. Speaking of profits, Visa has demonstrated phenomenal economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, Sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, you can see Visa's operating profit margin increasing from 62% in 2014 all the way up to 67.15% as of the latest update. This operating profit margin of 67.15% is the highest of any of the companies that I follow. An operating profit margin at this scale is absolutely extraordinary. Companies envy this type of profit margin. Companies are happy to generate operating profit margins in the double digits, like 10 or 12%. Companies are usually happy with that kind of operating profit margin. Visa generates an operating profit margin of 67%, and that demonstrates the profitability of its business model. It spent decades building the network, attracting consumers with their Visa cards, and then when that many people have a Visa card, it makes merchants almost forced into accepting Visa as a payment method because they want access to that massive cardholder base. And so now that it's built that network, it's reaping the benefits of that hard work. And it's also a fort against the business. It's difficult to encroach on that network. It'll take another business a really long time and a lot of money to encroach upon that network. And so for all those reasons, Visa's been able to generate extraordinary operating profitability, which I suspect will continue. And I know Warren Buffett likes companies that can generate this level of profitability and compete and hold on to that advantage longer term, as Visa has done. Not only has Visa maintained its north of 60% operating profit margin in the last decade, but it has expanded on it. And that's truly excellent. And it's a similar story if you look at Visa's cash flow from operations to sales, north of 60%, 63.56%, also very solid. That means $100 in sales turns into $63.56 in cash flow for Visa. That's a great conversion of sales into cash. Again, another enviable statistic for companies worldwide. And finally, even though Visa has all of these excellent characteristics, it's trading at a reasonable valuation, a forward price to earnings of 23.3. So you're getting an excellent business, a strong competitive advantage, and operating profitability that's best in class, best in the world, and you're getting it at a fair valuation. So for all these reasons, I think Warren Buffett likes Visa, and one of the reasons, and that those are the reasons why Warren Buffett, I think, owns Visa. It's definitely a lot of the reasons why I own Visa stock and why I'm recommending Visa stock as an excellent dividend stock for passive income investors in 2024. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.